Yeah, good morning, everyone. So, US markets again remaining in a range. Though yesterday it was down a bit. Uh, though S&P was down, but Nasdaq was positive, mainly driven by Alphabet, which came up with very good result post-market day before yesterday, and that has supported the price yesterday. And overall, the uh, Nasdaq ended positive. Even futures of the US market are more of a positive. We have a lot of corporate results in today, tomorrow, and which can drive the market in the near term. Apart from that, the problem in the small bank, that is First Republic Bank, continue. Share yesterday, I said that slide by around 49%, and uh, yesterday again the prices declined by around 29%. So that bank is becoming a bit problem, and quite possible that the central bank might have to come to support that bank to take it out from the crisis. The positive part is that the other small banks in the US are not facing similar type of crisis in the prices. There, the share prices are more of a stable, and somewhere we have seen even the positive impact also in the yesterday trade, wherein Westpac Bank moved up by around 7% positive, and other banks were either 1 or 2% plus or minus. So this seems more of a specific to one bank, and quite possible we may have a resolution for that in few days. Apart from that, commodity is seeing some decline, mainly concerns on the future growth, both in US and China. And even the oil has come down below $80, and now it is somewhere at around $78. Yesterday it declined by $3. So whatever the production cut support which was given to the prices in last 1 month is now fully out, though the production cut will continue. Uh, so that is indicating that there is a very sharp slowdown in the demand expected. Apart from that, iron ore and steels more of a remain flattish, and iron ore was plus by around 1%. So overall, seems like again more of a range-bound trade type of day for India. Also, today being expiry date, need to see them. There may be some volatility on that account. I'll request technical team to take up from here.
Yes, thank you. So, good morning, all of you. Today, the market is likely to open on a flattish note, and we're likely to witness some sideways momentum during the day. Yesterday, we have seen that the Nifty has maintained a closing above 17,800 levels, which is a positive sign on the technical front. Now the immediate resistance is placed at a 17,840 to 17,870 levels. If it surpasses that level, then this pullback rally is likely to be extended towards 17,940 to 18,000 psychological mark. Whereas on the downside, the immediate support is placed at 17,740 to 17,000 levels, 17,700 levels on the downside. So the view is bit positive as of now, because from the last three four trading session we are witnessing that the Nifty is trading in the pattern of high tops, high bottoms, and just going ahead in a northward directions. Coming towards the Bank Nifty, yesterday it was a Bank Nifty who had shown a very good kind of a bounce back rally to about 42,800 levels on the closing basis, which is a positive sign on the technical front. Upside, the immediate resistance is placed at 43,000 levels. Any move above that level will extend this move towards 43,240 and 43,500 levels on the higher side. Whereas on downside, the immediate support is placed at 42,500. Any move below that level, we might witness some profit booking, which might take a Nifty towards Bank Nifty towards 42,300 to 42,200 levels. Now coming towards the Fin Nifty, 19,060 and 19,130 are the resistance level we need to keep eye on it. On the flip side, 18,900 and 18,800 are the crucial support levels. Now coming towards the stock specific, as of now, Dabur really looks good on the technical front. The stock is well placed above the important moving averages. We are looking for a target of 554. Yesterday, we have initiated a buy call at around 530. One can create a buy position today also with a stop loss of 519 for immediate target of 554. That's it from my end. I request derivative guys to take a call for this.
Thank you. Good morning, everyone. So on the derivatives front, we are witnessing that Nifty is holding a good support at 17,500 level, and on the upper end, it is likely to surpass the resistance of 17,850 level. Once if it gets clearance of 17,850 level, then the call rate positions of 17,800 is likely to get shifted towards 18,100 to 18,200 strike on the upper end. So 17,850 would be the important resistance zone. Nifty is continuously we are witnessing from past 2 to 3 weeks is trading in the range of 17,500 to 17,850 levels. So breakout or breakdown of this range is very much important. While we are seeing that India VIX is trading at a lower level. So we expect the volatility to be less. Once if India VIX goes about 13.5, then only we might witness the volatility to get increase. Once if India VIX goes about 13.5 level, then the another level for the India VIX to stretch on the upper end would be towards the 15.5 to 16 level. At that point of time, some sort of cautious and panic movement will also increase if it goes about 13.5 level. While PCRY, we are seeing it closed yesterday at 1.22 level, and in the previous trading session also it was trading around 1.10 to 1.30 level. So PCRY is currently in the good strength and the good at the very favorable levels. So we expect, as per the overall data, we expect the trend to be positive because on the stock specific and sector specific front, we are seeing that the buying is being continuously witnessed from past 3 to 4 trading session. So hold a long position with the support of a 17,500 level. Once if Nifty breaks 17,500 level, then only we might witness some sort of a panic creation in the market. The current support for the market would be 17,700 level. Once if Nifty breaks 17,700 level, then we might witness it might again break to a 17,500 level. But the important support level for the Nifty for the coming month, May series, would be 17,500 on the upper end, 17,850 level. While on the stock specific and sector specific front, we expect the stock like Indian Hotel and Tata Motors. These two counter looks very strong because as per the OI positions in these two counters, fresh longs have been continuously initiated in these two counters, and we expect the position to get shifted on the upper end because IVs on the upper end of the OTM strikes are continuously increasing on the buy front. So we expect these two counters to show some positive strength in coming 1 to 2 trading sessions. So that's it from the derivative front. Thank you.
Good morning. Bajaj Finance result is marginally above expectation. Moderation in cost to income and lower credit cost led to profit coming 6% ahead of expectation. Loan book grew 7% sequentially, 29% year on year, and net NPA has now declined to 0.3%, which is one of the lowest historically. For FY24, company has guided for AUM growth of between 25 to 29%. NIM declining marginally, cost to income moderating below 34%. And as a result, ROA should be coming down by around 10 basis points in FY24. But on overall ROA of more than 5%, this is marginal. The stock is trading at a PE of 22 times FY25, which seems broadly fairly valued. However, there is scope for compounding of 20 to 25% in coming years. So we are positive from long term. Canfin Homes result has improved. Company showed decent growth in operating profits, which grew 4% sequentially, 14% year on year. Loan growth was also decent with 5% sequential growth and 18% year on year. Although disbursement were lower on a year-on-year basis by 6% in Q4. So we will have to see what was the reason and whether what guidance management gives for disbursements. Asset quality remains one of the best amongst HFCs with net NPA of just 0.26%. Recently, the ex-MD of Group Finance has joined here as MD, so there is a high expectation from him, and we will have to see what are his plans. But overall, we are positive from long-term perspective. HDFC Life result was above expectation. Q4 and Q3 numbers include that of Exide merger, but year-on-year numbers are not comparable. AP grew by strong 69% year-on-year. So company's market share increased from 15.8 to 16.5%. Growth was supported by high-ticket non-par business, mainly driven by higher demand due to budgetary changes. So demand was like before 31st of March, people took that advantage. Core premium growth is expected to grow at 18 to 20% in current year. Stock is trading at 3 times price to EV. Now from if we recollect a couple of years back, it used to trade at 5.5 times price to EV. So stock has had a lengthy time correction and valuation also seems comfortable now. So plus the HDFC Bank's stake can now increase to 50% which has removed the technical overhang on the stock. So overall, we are positive from near-term as well as long-term perspective. SBI Life result was marginally above expectation because of a higher VNB margin. However, if we look at the APE growth on a year-on-year basis, it was at just 10% compared to HDFC Life 69% and ICICI Prudential's 27%. Therefore, market share has declined by around 300 basis points quarter on quarter. So we are neutral in near term, but positive from long-term perspective. IIFL Finance result was in line with expectation. On balance sheet loan book has grown by 18% year on year. However, due to steep increase in co-lending business, the combined AUM has grown by 26% year on year. Profit grew 8% sequentially, 43% year on year, and credit cost remains negligible. Gross NPA also continues to decline to 1.8% versus 2.1% last quarter. We are positive on IIFL Finance. UTI AMC result is below expectation. AUM declined by 1% versus if we look for the industry, the performance was flattish, which is why the company lost 10 basis points market share. More importantly, on the equity AUM, if you see, the AUM has declined by 3% sequentially, whereas for industry, it has grown marginally. So company has lost 20 basis points market share in the equity AUM, which is negative. And due to this, the profit declined. Profit came 14% below estimate, and we are negative in the near term on UTI AMC. Poonawalla FinCorp result has improved. Year-on-year figures are not comparable because last year's figure include the housing subsidiary numbers. There was good sequential improvement on all parameters. Loan book grew 16% Q on Q. And excluding the housing subsidiary, on year-on-year basis, loan book grew 37%. Profits increased 20% sequentially. Net NPA remains below 1%. It further declined to 0.8%. Stock is trading at 3.8 times trailing price to book value, so not very cheap. But we think it's a decent compounding stock, and growth of around 30% should continue even in this year. That's it from my side. Thank you.
Good morning. Coforge has posted inline set of numbers for the quarter with dollar revenue coming in at 264.4 million. EBITDA margins includes one-time rupees 80.3 crore employee expense towards special non-monetary incentive awarded to employees. With this, adjusted EBITDA margin came at 17.3% versus expectation of 19.3% FY24 management has given a revenue guidance to be in the range of 13 to 16% in CC terms. Gross margin is expected to improve by 50 bips compared to last year, FY23, and EBITDA margins is guided to be same as FY23. Outlook is neutral. L&T Technology Services posted in line with expectation set of numbers for the quarter. FY24 revenue guidance is of a USD constant currency growth of 20% plus. Of this, 10% would be organic growth. Management aspire EBIT margin to be in the range of 17%, which takes into account Q2 wage hike. Outlook is neutral. KPIT Technologies has posted above expectation numbers for the quarter. For FY24, CC revenue growth guidance is to be in the range of 27 to 30% and EBITDA margins between 19 to 20%. Outlook is positive. Thank you.
Global Power Technology major Cummins Inc. Has signed a definitive agreement with Tata Motors to manufacture a range of low to zero emissions technology products in India over the next few years. As part of the agreement, Cummins and Tata Motors have set up a new business entity called TCPL Green Energy Solutions Private Limited, a wholly owned subsidiary under the existing joint venture. This is positive for both the companies. On the result front, Maruti Suzuki announced its result. The result was broadly in line with expectation. Revenue came in at 32,048 crores versus an expectation of 32,071 crores, which grew by 10% sequentially and 20% on a YOY basis, affected by lower than expected average selling price. The ASP declined by 4% sequentially due to mix impact. Gross margin contracted by 60 basis points sequentially to 26.7% due to RM cost headwinds. EBITDA margin came in at 10.5%, which was marginally lower than the expected margin of 10.7%. The company reported quarterly sales of 5,14,000 units in quarter four. Shortage of electronic components led to production loss of 1,70,000 units in FY23. The management continues to maintain a cautious stance on supply chain availability. It highlighted that chip manufacturers continue to allocate more chips to manufacturers of premium vehicles. However, in the first quarter of FY24 too, the production will remain under some pressure due to uncertainty over chip availability. The pending customer orders in quarter four stood at 4,12,000 units, of which 1/3 pertain to CNG models. The company has planned a capex of 8,000 crores for FY24, with majority of investments allocated towards establishing the Khargoda plant and balance being allocated towards development of new models. The management also agreed to increase production capacity by 1 million units. However, no timeline has been announced for this incremental capacity. The stock is trading at a PE of 23.2 times FY24 EPS. Thank you.
Yeah, apart from this, few more results. Voltas declared results and apparently looks lower, but that is mainly because of their EPC division, which has incurred losses and wherein they had taken some write-off of their international business. But if we see the cooling business has shown ahead of expectation number. Unitary cooling product sales grew by around 12.7%, whereas EBITDA margin was 10%. Both were ahead of expectations. So quite possible looking at the result, the stock may open lower, but we expect it to recover during the day. Then Super Stock has come up with the number. Here again, the results was ahead of expectations, mainly on account of EBITDA margin and gross margin. Both have seen improvement both quarter on quarter and year on year. Those sales remain a bit short of expectation at around 916 crore versus expectation of 928 crores. But EBITDA margin came in at 17.1% versus expectation of 13.9%. So that is positive for the company. Apart from that, Syngene International came up with the good numbers and the results were above expectations, wherein revenue grew by around 31% year on year and EBITDA margin has also shown were in line at around 32% in this quarter. So overall results showed good improvement. Apart from this, results for next Monday and Tuesday, Monday being holiday, there are limited results on that day, but Tuesday has some results. The, so Monday, Adani Green is likely to report number. Need to see how it react according to that, and then there are some small company which will be reporting on that day. But second has Ambuja Cement. Ambuja Cement is likely to report improved set of numbers, wherein the EBITDA margin, wherein EBITDA per ton is likely to increase by around 260 rupees, and year-on-year volume is likely to increase by 5.3%. So result is likely to be better. Then KEI industry is likely to report number. Here again, the numbers are likely to be showing improving trend, wherein revenue though will be growing at around 8%, but EBITDA margin will show substantial improvement. Last year, the EBITDA margin was 9.6%, which is expected to report at around 11%. So there is a EBITDA improvement of around almost 23% year on year in this quarter. Then another big result is Varun Beverages. Here the results are likely to show improvement year on year, wherein revenue is likely to grow by around 45% on lower base. But EBITDA margin is likely to show some moderations. Last year, EBITDA margin was somewhere at around 18.8%, wherein this quarter it is expected at around 16.9%. So EBITDA margin will be showing some declining trend, wherein as such, the overall result may be more of a neutral. Then Tata Steel is likely to report number, and uh, standalone level will show good improvement in EBITDA margins. EBITDA margins are likely to show standalone India operations to be at around 15,400 rupees, whereas EBITDA per ton in the last quarter it was 11,200 rupees. So there is a substantial benefit of some price improvement and reduction in the coking coal prices. Whereas European operation will continue to struggle and are likely to report EBITDA loss of around $75. Last quarter also they had incurred EBITDA loss of around $115. So this is likely a European operation will continue to drag the overall performance of Tata Steel in this quarter, but the benefit of decline in the coking coal prices will be reflected in the coming quarter, even in the European operation. So the outlook from European operation will improve in the next quarter. What we are seeing that the raw material prices are coming off, iron ore and even the coking coal prices has come off very sharply, whereas the steel prices are coming down, but not to that extent. Quite possible that since there is a lower demand in the international market, possibility of decline in prices even in India based on the imported parity prices can come off in the coming period. So overall direction wise, steel prices can look to some decline. Whereas Tata Steel in this quarter at consolidate level will be showing marginal improvement because of the lower profitability in European operations. So EBITDA per ton at console level is expected at 5,600, which is likely to improve to 7,800 rupees. So overall result is likely to be more of a neutral type of thing. So that's all from uh, fundamental or tech equity desk. Now request commodity people to take up from here.
Yes, thank you, sir. Good morning, everyone. So in today's session, gold and silver are likely to trade positive. One can buy gold around 60,100 to 60,050 and maintain a stop loss of 59,800. On upper end, we are witnessing some resistance area at 60,400 to 500 levels. So profit booking is advisable at those levels. And today we have advanced GDP data of US at 6 o'clock. So before that, one should square up their positions and wait for the data. And silver also, one can buy around 74 200 to 100 levels and maintain a stop loss of 73 700. On upper end, 74 800 to 75 200 is the target we are looking for. In crude oil have opened gap down, and it could probably test 6100 to 6050 levels on downside. So at the moment, selling on rise is recommended. Already it is down by 127 rupees. So one can sell around 61 70 80 and keep a stop loss of 6230. Natural gas. Mm, Natural gas prices are consolidating from 178 to 200 levels, and one can buy on dips at 185 and maintain a stop loss of 176. However, 200 is acting as a stiff resistance area, so for trading purpose, one can also sell at that level. Um, Copper also prices have opened gap down, and it is likely to test the support of 734 to 32 levels. So only for a pullback one can buy, else one can maintain a stop loss 730 28. On higher end, 740 41 is a area where we are looking for some selling pressure to come in. Similarly, zinc also heading towards 233, 232 levels. So as long as it is holding 233, one can expect some pullback. But however, 236, 37 is the area where it is facing some resistance area. So watch out for that. Thank you very much. I'll ask Utkarsh to take over from here.
Yeah, very good morning, everyone. In USD, INR witnessed strong rally yesterday, so one can create short position if we get any pullback around 81.9 to 81.95 levels with a stop loss of 82.06.75 levels for the target of 81.73 and 81.62 levels. In Euro INR, one can create long positions above if market sustaining above 90.60 levels for the target with a stop loss of 90.32 levels for the target of 90.70 and 90.80 levels. Then once JBP INR, one can create long positions around 102 to in between 101.90 levels with a stop loss of 101.80 levels for the target of 101.30 and 102.45 levels. Thank you.